Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so that we can better understand tomorrow. Today, we're taking a look at the Bund. This is on the Eurex exchange, if you're not familiar with it. Great little market, and overall had a very nice bullish trend to it. We started off the day not so great, like move up, move down, and now we're moving into a new high. So chances are that we're going to kick off into a range. It just kind of fits the scenario. We see that very often where the market just kind of cycles back and forth, and every time it tries to break out, it ends up being a failure. But when we open up the morning, and for us that's around 7 or so, 8 o'clock, 7, 8 o'clock, it had a nice bump back up again. Bull trend is still very much in play at this point, and the buyers trying to get it back to the top edge of that range, and the top edge of the range right around here. Now, when the buyers are pushing back up towards the high, we have a huge sell move down, absolutely no follow through. Right? Sellers try again, nothing but wick on the bottom. They try again, nothing but wick on the bottom. Buyers try, not so great, but their follow through is at least a doji, right? It's not complete failure. And then they get a breakout move to the upside. So that's the continuation that the buyers want to see. And that's a buy opportunity to push the market back towards the top of the range. And it worked out pretty well, right? A nice little bump into the high of the range. And then we start looking for potential selling pressure with heavy volume nodes. We're looking at a lot of volume clustering in up here. And in this case, given that it ended up breaking through it, it appears as though it was more likely buyers who bought down here taking profit and then buying as a continuation on the failure. But there was a selling opportunity to try to push the market back down. Didn't go very far. When the sellers had that big breakout move, it immediately snapped right back up. And that led into a triple bottom, right? 1, 2, and 3. And then when they came down and tested that triple bottom again for the fourth time, tried breaking out to the downside, immediately rose right back up again. And that is another buy opportunity to shove the market back up. So you have a triple bottom buy and then a trap low quad bottom buy to finish the move off towards the upside. And with the buyers still firmly in control, it follows through with a huge bull spike back up again, allowing the buyers to keep that train on a running back up towards the top. We start pushing into the prior high of day after that big breakout move, and it slams right through. It doesn't even hesitate. Pulls back to it, uses it as support instead, and we get a beautiful looking bull engulfing candle to push the market one more time towards the upside as it round off into the lunchtime session. So overall, just a great combination of not only market psychology, but also technical analysis. Market psychology in the sense that we had a lot of traders who were probably trying to trade this as a range. I know I was one of them, trying to fade the high end of this as a range, and I only got about 4 ticks out of it. It didn't really go very far. You didn't get the follow through that you were looking for, and when it failed, the sellers quickly realized, wait a minute, something's wrong. If this is a range, it should be rising pretty quickly like we had back here. And it's not doing it. And it's certainly not for lack of trying. Heavy bear movement to the downside, and they still can't get it going. And that is a clue to get out and potentially look at the long side, and it ended up working very nicely. So that's going to do it for this one. Hopefully you found it useful, a little bit interesting, maybe a little entertaining, and we'll see you next time.